Welcome to the Tech Egg. Don't get scrambled. Enjoy the video.
In this video, I will explain how to make ledger entries in accounting. A ledger serves as the central repository for all your financial transactions, providing a detailed history of every dollar in and out. It helps you organize and summarize financial data, which is crucial for understanding your financial health. We will cover the fundamental concepts, including the different types of accounts like assets, liabilities, and equity, and how they form the backbone of your financial records. The cornerstone of accurate accounting is the double entry system. This principle dictates that every single transaction has two equal and opposite effects on your accounts. For instance, if you purchase supplies with cash, your supplies account increases with a debit, and your cash account decreases with a credit. This meticulous method ensures that your books always remain in balance, providing a comprehensive and reliable financial picture. Let's walk through the practical steps of making a ledger entry. Begin by noting the transaction date and a brief, clear description. Then, identify the specific accounts involved, for example, cash and sales revenue for a cash sale. Crucially, determine whether each account needs a debit or a credit. Remember, debits increase assets and expenses, while credits increase liabilities, equity, and revenue. Finally, record the exact amounts in the correct columns to ensure your entry is balanced. Once you have made your entries, the next vital step is balancing your ledger. For each account, sum all the debits and credits to find its ending balance. Then, aggregate all the debit balances from every account and all the credit balances. These two totals must be exactly equal, confirming your books are balanced. A regular review, perhaps weekly or monthly, helps catch any small errors early, ensuring your financial records remain accurate and reliable.
Thanks for watching. Consider subscribing if I helped unscramble your problems.